horizons in India. Watch luminaries from the world of business talk about the Indo-Japan future.
Huge market, huge demand coming from India.
I have not been this optimistic for this relationship.
Important differentiator of what made Japan successful is technology and is aggressiveness.
At these times.
Presented by RGF Executive Search.
Welcome back to Power Breakfast on CNBC TV 18. A quick check on the US stocks and how they closed up yesterday. They rallied actually with the S&P 500 as well as the Nasdaq halting a 3-day losing streak. This after upbeat report on new home sales as well as investors. They bet on further monetary stimulus coming in from the ECB, that's European Central Bank. The data showed that the new home sales in the US surged in August to the highest level in more than 6 years, a sign that the housing recovery is making progress. And also the CBOE volatility index decreased 11%. Remember, it's been on a bit of a tear. So that one, in fact, corrected in yesterday's trading session. And that was the largest decline that we've seen on the CBOE volatility index seen since August 4th.
U.S. stocks rallied on Wednesday with both the S&P and Nasdaq turning around prior 3-day losing streaks, adding 15 and 46 points respectively. And the Dow, of course, also up big today, adding 154 points. The action was bolstered by an upbeat report, on new home sales. Some highlights for today also include Bed Bath & Beyond. The retailer jumped after reporting quarterly results that beat expectations on both EPS and revenue. Their guidance for the rest of the year looks strong. Merrimack Pharmaceutical also rallied after the company reported its plans to develop a drug to treat pancreatic cancer outside of the U.S. with Baxter International. And Walmart also leading blue chip gains today after the retail giant announced a deal with Green Dot, a prepaid card company, to offer checking accounts to its customers. And Apple falling today. The company pulled its iOS 8.0.1 update after multiple users reported issues with the new version of the operating system. And Yahoo, which has continued to slide since Alibaba went public last week, is now saying it has a roughly 15% stake in the Chinese e-commerce giant.
Okay, on that note, let's get in some global perspective.
I think it probably does make sense that we're changing the PBOC governor at this point. But for the markets, we're a little bit confused about what monetary policy is in China. Remember that we had very strong total social financing growth in June. Then the July number came in at 40% of the market estimate. And we've seen a little bit of an acceleration in the more recent numbers. So it's not entirely clear what monetary policy is at the moment. But maybe the context is that China is trying to achieve what is the impossible, which is economic reform, which is about better capital allocation, yet still meet a politically significant target of 7.5% GDP growth.
We use a smattering of technical indicators that we've back-tested. Among these include RSI, the slope of the 200-day moving average, and the relationship of the two of those things. We also like to use some crowd sentiment stuff for contrarian indicators. And frankly, none of those indicators on our work suggests particularly rocky times going forward. I think that the 2,000 level is an important psychological level on the S&P, and I think after having broken it fairly recently, I think it's only natural that you'd see some backing and filling. But right now, we don't see tremendously bad storm clouds on the horizon. We still remain constructive, both in the short term and in the longer term as well.
All right, then let's come back home. Now, 204 coal blocks will get deallocated, and the repercussions are bound to hit other sectors as well. Lata Venkatesh joins in to tell us what's the impact on the banking space. Lata?
Well, there are 10 companies which are severely impacted by the coal being deallocated, but they will not have a big problem paying interest simply because they're fairly big companies. That's Hindalco, Sesa, SAIL, Tata Steel, JSW Steel, Rail Power, JPVL, JSW Energy, Adani Power. These don't have a debt servicing problem, so bank exposures to this I am not including. Then there are casualties of power and metal companies which will have a bearing on their own ability to pay back the interest. These include Jaiswal Nico and Electro Steel. Both of them are already restructured companies. Monet Ispat, Prakash Industries, Sarda Energy, Usha Martin. And among power, GVK, Abhijit, KSK, CESC, JP, JP Associates, Monitor Ispat, SKS Ispat, DB Power, and RKM Power Gen. So what brokerages have given me are the total exposure of banks to the second set of companies where there could be an impact on their ability to pay interest. Now, the exposure to that, Axis to these 17 companies has an exposure of 2,700 odd, which is just 1.2% of its total loans. ICICI has about 3,000 crores exposure, about 0.9% of its total loans. IndusInd has a 300 crore exposure to some of these companies, and that's 0.5% of their total loans. Yes, 450 crores. Again, 0.8%. HDFC Bank is the least, has 273 crores exposure to these various steel and power companies, just 0.1% of its loans. It's the public sector banks which have a slightly higher exposure. SBI has 7,800 odd crore exposure to these affected companies, and that's 0.6% of its loans. BOB, 2,000 odd crores, 0.5% of its total loans. PNB has 4,100 crore as its exposure, 1.2% of total loans. Bank of India, around a little less than 2,000 crore exposure, 0.5% of its total book. Union Bank, 3,000 crores, about 1.1%. It is REC, PFC, which have a much larger exposure, about 3 and 2% of their total loans to these companies. IDFC has 825 crores, about 1.5%. But the impact on banks was noticed more in the stock markets simply because banks can also get affected by the power distribution companies. As coal gets expensive and the power companies increase the cost of power, the DISCOMs may or may not be able to pass it on. In which case, the bank exposure to the power distribution companies also comes under a bit of a pressure, or will come, but that cannot be estimated. So that is why REC and PFC were still resilient in trade, but the banks took it on their chin.
Okay, Lata, thanks very much for that. So interesting statistics coming out from the banking space. But yet another setback for the JP Power's bid to sell 3 hydropower plants. This is after the Abu Dhabi-based TAQA pulled the plug on the deal earlier. Reliance Power has done the same as well. Pragya Bharadwaj now joins in with more details on this. Pragya, JP Power is now second time unlucky. Why was this deal called off according to you?
Well, that's right, Ekta. It seems that the inevitable has happened. So many regulatory uncertainties and news flow articles that were coming out, and, it was bound to happen at some point. That's what the murmurs on the street were indicating. Both JP Power and Reliance Power at this point of time have called off the talks. Reliance Power was to acquire the 3 hydro assets for Jaiprakash Power to the tune of about 12,000 crores. This was for the companies Karcham Wangtoo, the Baswatu and the Vishnu Prayag plant. Conflicting statements coming in from both the parties. Reliance Power has cited reasons like prevailing regulatory uncertainties and tariff issues, which they believe would have harmed the valuations of the deal. On the contrary, JP Power believes that the reasons are not attributable to any regulatory uncertainties, and the deal has been called off due to the difference in the commercial aspects which both of those companies had. This is the second instance that we're seeing within a span of 3 months that a proposed deal for the sale of the hydro assets of JP Power has been cancelled. In fact, it sends out a huge negative signal as far as the investors of the company are concerned. Remember, both of the companies had entered into an exclusive MOU in July 2014. This deal was very imperative for JP Power given the fact that they're facing huge cost overruns in all of their projects. The company has equity commitments of to the tune of 2,000 to 2,500 odd crores just for this financial year. And there is a mounting debt of about 24,000 crores which JP Power has to deal with. The valuations of the JPVL and the Reliance Power deal were of course dependent on the capacity of both of those projects and the tariffs. Recent media articles were indicating that JP Power had violated the capacity norms at its Karcham Wangtoo plant. Not just that, the Central Electricity Authority had gotten involved, and it seems that they were likely to issue a show cause notice to JP Power for the alleged violation with respect to this particular plant. On the techno-economic clearance front, the representatives were still to submit a report, and on the back of this, remember, this has never happened before, so it would have raised a huge uncertainty had the techno-economic clearance been revoked and the valuations of the deal would have been jeopardized. Edelweiss has come out with a fairly strong worded note. In fact, they believe that the cancellation is a significant negative, not just for JPVL's debt reduction plans, but also for the parent company, which is Jaiprakash Associates, and its cash flow as well. Remember, JP Associates is battling a debt of about 70,000 crores. They had a huge debt reduction plan set out for this financial year, and this was a big pie in that puzzle for them to achieve that target. It seems they will fall short of that target, so it seems at this point of time. Edelweiss has maintained a target price of 42 and a hold rating on JP Associates. They do not cover JPVL, but huge setback as far as the JP Group is concerned with respect to this deal getting called off.
Okay, Pragya, thanks very much for that. So maybe there could be further downside that we could expect for JP Associates in today's trading session. Well, moving on. Now, Prime Minister Modi is getting ready to hard sell India to investors in the US, and IIFL says he won't have a tough job on his hands. IIFL is also confident that the Sensex could well hit 30,000 by year end. Shireen Ban caught up with Prabodh Agrawal and R. Venkataraman of India Infoline on the sidelines of the India Investment Forum. She also caught up with Bridgerath of UBS. The unanimous verdict from all the three of them was that India is the place to invest.
The feeling we are getting from ground zero is that investors are very excited about the India story. I think Indian economy is clearly on the upswing. The government is taking steps to kickstart the economy. Consumer confidence is coming back, business confidence is coming back. So in a nutshell, investors are quite excited about India. What I think disappointing them is the pace of action on ground level. So some amount of investors are asking questions about the actual steps taken by the government in, I would say, contentious areas like land reforms, labor reforms, natural resource reform. So those are the questions that remain in the investors' mind. But to summarize, they are quite enthused about the India story.
They're enthused, but they're waiting for more policy action and more policy certainty. So in that sense, what is it going to mean for FII flows?
See, in our opinion, FII flows will continue unabated. And that is simply because India is shining like a beacon of excellence around the globe, because the Indian economy...
In comparison to everybody else.
Absolutely. So we are seeing earnings growth coming back to India. India is a large economy. We have a population of 120 crores. So we are excellent demographics. If you compare to the rest of the developed world, especially Europe, which is having a negative demographics problem. So people are quite enthused about India.
Prabodh, what's the sense that you're getting in terms of how the Cole verdict by the Supreme Court is going to be seen or read by foreign institutional investors?
See, foreign investors believe that the new government would be able to sort out many of the problems that India has been facing for many years. And in a way, this Cole verdict is being seen as a cleansing process, as you're saying. It's a short-term negative for sure, but the good thing is that the Supreme Court has allowed the mines to operate for the next 6 months within which the auctions would be held. So I guess they would definitely find a way not to disrupt existing production and find way to auction and increase production over the next 2 to 3 years. So it's definitely, I think, positive, and the investors are not too concerned about it.
All right, then moving on. Over 70% of Indians say that business houses have become a source of hope since the 2008 financial crisis. But the first ever CNBC Burson-Marsteller corporate perception indicator indicates that while 49% of Indians feel that companies don't pay fair taxes, 58% of Indian business leaders beg to differ. Shireen Ban caught up with Don Baer, the CEO of Burson-Marsteller in New York. Here's a slice of that conversation.
I do think there's a level of skepticism that is clearly there and has continued. And if you think about it, it does make some sense. I mean, those markets were most severely affected by the financial and economic crisis of 2008 that really, in some respects, continues today.
Right.
Whereas in more emerging markets, they certainly were affected. But you've also seen much more economic progress over the course of that period of time. 6 years is a long time now. Sure. And we've seen a lot of these economies that certainly there have been false starts here and there, but that have continued to move forward.
You talked about this at the Clinton Global Initiative this morning, and you had former President Bill Clinton there as well, and a whole bunch of other participants. What seems to be the solution? What seems to be the road ahead? Because in terms of the role of the corporation, there is a crisis even as far as capitalism in the fashion that we know of it today. What seems to be the solution in terms of the road ahead?
Well, I actually would argue that capitalism is working. Capitalism is always in a state of evolution, right? And we're seeing maybe some dramatic evolution going on in certain fronts, in part because of the influence of technology and the changes that is bringing, the continuing influences of globalization, the rise of a middle class in so many parts of the world that we haven't seen before, all of which at the end of the day is good, right? And capitalism is, as we know, about creative destruction. So there's the destruction part and there's the creative part. I think one of the answers...
But there's been more emphasis on the destruction part over the last few years.
There's a lot of emphasis on that, but we also have to look to where the positive is. You know, this survey also shows that around the world, uniformly, emerging markets and developed markets. People embrace the idea that the private sector and corporations drive economic growth, they drive job creation, that they are more socially responsible than they used to be. Many things that are positives.
Okay, contrary to expectations, Vodafone will not list its Indian business anytime soon. Speaking in the national capital at a luncheon meeting, Vodafone's global CEO, Vittorio Calao, said that, and I quote, "It's not just the right thing for Vodafone, it's the right thing for the Indian people who will buy shares in a new company with uncertainties that they are not capable of judging, which we as insiders can. Calao went on to say that the last thing I want to do is list Vodafone in India and then the stock price goes down because decisions went wrong in a month. So you need better stability before a listing period to make the IPO successful." End of quote. Throwing light on the uncertainties facing India's second largest telco, Martin Peters, the head of Vodafone India, said, and I quote, "Anyone can bid for free for our business because if we don't get back our spectrum at the next auction, we have to close down the business. There is no fallback option. An IPO today would not be a realistic option." Okay, on that note, we'll take a break. But up next, we'll get you the picks of our 3 contestants on our Bullseye segment. Stay tuned.